Well, for more on the struggling economy, with us is Stanley. He's the chief economist at Pierpont Securities. He's been one of the most optimistic economists out there, saying earlier this year that the economy would grow by 3.8%. He's since cut that forecast to 2.9% and now says that the economy's animal spirits are fragile. He joins us now from Stamford, Connecticut. Stephen, great to have you back with us on this program. What's got you worried now?
Good morning, Betty. Well, I think the trouble is the recovery's never really gotten going in a full bore, and so I think confidence is as you said, I think it's a little fragile. So what looks to me to be a function of temporary factors, and I would say the two that really have hit the economy pretty hard this spring are higher gasoline prices and the supply chain issues coming out of Japan after the earthquake. Those would, under normal circumstances, those would fade. We know gasoline prices have fallen and the supply chain issues are starting to resolve themselves.
Right.
But I wonder, confidence has been a little bit shaky, and I just hope we're not entering kind of a self-fulfilling, race to the bottom here.
So what you're saying is that even though these factors, which sound like they're temporary, I mean, gas prices are coming back down again, and we're gonna fix these supply issues with Japan. But what you're saying is that maybe the damage has caused so much to the confidence of Americans that that's going to be irreparable, right?
That's my concern. I mean, I would say still the most likely scenario from my perspective is that the economy will bounce back pretty nicely in the summer. I think, consumers are going to have a little bit of a tailwind with lower gasoline prices. And the manufacturing sector, should show very strong growth if for no other reason than just because the auto sector will be returning to normal. So I think we have some good positive forces that should help to drive a much better performance as we move forward here. But, I do worry that, people have gotten cautious. Clearly, May was a month when businesses stepped back a little bit and said, hey, wait a minute, we're not going to hire as much this month. Let's see how things go. And, my point is that while most likely we'll be fine, right. There's the risk that just becomes a bit of a self-fulfilling prophecy.
At what point would you cut your forecast again?
Well, for my forecast to come to fruition, which is for a pretty strong third quarter, I'm going to need to see some improvement in consumer spending, probably starting in June. I don't have a lot of time to wait here. And I think also employment is really key because we had good employment numbers through April. Obviously, the May number that came out on Friday was not good at all. If we see more numbers like that, another month or two of really tepid job growth, then I think that's a big problem for the household sector, because we do need to see ongoing income growth to support the kind of consumer spending gains that I hope to see in the second half of the year.
Stephen, let me just play for you. We interviewed Austin Goolsbee on Friday after the jobs report. Let me just play for you what he said about the economy.
It's a long, steady process to dig our way out of the worst recession since 1929. President's always said that. We got a long way to go, but the overall trend is substantially more positive than it was 2 years ago when he came into office.
Is this part of our problem, Stephen? We're just not focused enough on the fact that we've had substantial gains from 2 years ago.
Well, yes and no. I mean, what he says is true. We had 3 very strong job numbers through April, and then a weak one in May. And if you average it out, it looks fine. The question is, was there really something happening in May, or was it just pure statistical noise? And as much as I'd like to argue the statistical noise story, because as you said, I have been pretty optimistic.
Right.
I think we've gotten enough information to see that something did happen in May. The ISM manufacturing number was very weak. The employment number was very weak. We've had a number of other softer indicators. So the question for me isn't so much if anything really happened, it's whether what happened was temporary or more lasting. So right, that's what I'm focused on at this point.
Or more permanent. Stephen, is there anything then at this point that the White House can do?
I'd like to see I don't think there's anything specific in terms of what, has been called fiscal stimulus. I think quite enough has been done, and right now the focus really needs to be on creating a sustainable fiscal policy for the long run and doing that in a way that is most helpful or least damaging for the economy. I'd like to see a little bit more of a pro-business attitude. I think, we saw that toward the end of last year and into the first part of this year. The president obviously signed off on the tax cuts that were passed at the end of the year, took a very conciliatory approach toward regulation, put a big op-ed in one of the major newspapers. And over the last month or two, some of the headlines have been a little bit more hostile, in my view, toward business. So I'd like to see, kind of working toward getting more growth and not so much of the populist rhetoric that we've been seeing of late.
Stephen, thank you. I appreciate you joining us. Stephen
My pleasure.
Stanley of Pierpont Securities.